What Do We Do? A podcast discussing wealth management and financial planning, introducing listeners to the leaders in our community. Hosted by the founder and CEO of Great Lakes Wealth, Dewey Steffen, alongside WWJ Midday News anchor, Brooke Allen.
Hey, I'm Brooke Allen. Our goal with the What Do We Do podcast is to educate listeners on topics that impact your financial growth, your retirement, and your lifestyle.
And I'm Dewey Steffen. Join us twice a month as we welcome some of today's leaders in the community for conversations that can help with investment decisions so you can plan for and live your best life.
Here's Dewey Steffen alongside Brooke Allen.
Well, hello, everyone out there in podcast world, YouTube nation. I'm Dewey Steffen, co-host of the What Do We Do podcast. I'm so excited to be back here again for another episode. Today's episode is season 2, episode 9, number 51. In today's episode, we have a guest, and I'm so excited to share today's guest with our community. He is an amazing member of our community, and he has an amazing story to tell. And with that, I'm here to remind all of you listening and all of you watching that the What Do We Do podcast is all about community. We want to be a leader in the community. We also want to give back to the community. And one way that we do that is we find other leaders in the community that have a story to tell, advice to share, and knowledge to give. And then we bring them on our podcast to share their expertise with our entire community. Today's episode, I have a gentleman who is not only a significant member of our community, but I consider him a mentor, an advisor, and a friend. And I'm going to formally introduce David Provost to all of you. But before I do that, I just want to say, David, welcome to the show.
Dewey, it's great to be here. Thanks.
You bet. And I'm so excited to share your story with our community, but I'm going to start with some formal comments about who you are and the amazing life that you've had to this point, okay? So with that, I'm going to start with your college days. David graduated from Alma College with a Bachelor of Arts. He earned his MBA from Eastern Michigan in 1984 and earned a certificate from the University of Wisconsin School of Banking in 1985, as well as having now received 3 honorary doctorates. Do I call you Dr. Dave?
Doctor.
Dr. Dave. Love it. Dave started his banking career with Manufacturers Bank of Detroit, which is now Comerica Bank, where he spent 13 years. Dave then established 2 banks. One was the Bank of Bloomfield Hills, the other the Bank of Rochester, which he then sold the combined banks to Private Bank Corp in 2005. Dave became chairman and CEO of Talmer Bank and Trust from 2008 to 2017, which then merged into Chemical Bank. Under Dave's leadership, Talmer Bank and Trust and its predecessor, First Michigan Bank, was the fastest growing bank in the country from 2010 to 2015, completing not 1, not 2, but 9 bank acquisitions. After that, he wasn't done. David then became president and CEO of CHFC, which is the holding company for Chemical Bank, the largest headquartered in Michigan. David recently retired as CEO of TCF Bank Corp, which is now known as Huntington Bank. This merger was completed on June 9th, 2021. It's also the day that David formally retired. Is this correct, Dave?
That's correct.
So
Formally retired from the bank.
Formally retired from the bank, and we will talk about having your hands free and able to do other things, right? The regulations keep you focused, but now you're on to the next chapter, which we will discuss. But first, I'm not done. David is also significantly active in the community and civic organizations. Dave serves as board of directors and chairman of the audit committee for Plastipack Packaging, a multi-billion-dollar privately held international packing company. Dave also serves on the board of directors of BBG. He serves on the board of directors for Detroit Economic Club, Say Detroit, Community Foundation of Southeast Michigan, Detroit Symphony Orchestra, board of directors for the Detroit Athletic Club, the Detroit Crime Commission. He's on the advisory board for Detroit Regional Dollar for Scholars, as well as Presbyterian Villages of the Michigan Foundation. Dave has served as a past chairman of the board of the trustees of Alma College, and Dave has also served past chairman of the Michigan Bankers Association, Southeast Michigan region. David, does that ring a bell?
That does. That Yeah, that sums it up for my charitable contributions.
Well, Dave, we're not done, and I promise I'm going to stop speaking so you can hear in a moment, but you have received many awards and many significant awards. Some of them include the 2007 Outstanding Leadership Award from the Yeshiva Beth Yehuda, the largest nonprofit day school in Michigan. Also, Detroit Business 40 Under 40, Dealmaker of the Year, and Most Influential Business Professionals. David also received Eastern Michigan University's Business of the Year for 2015, alumni-owned business category. Also 2 times Ernst & Young Entrepreneur of the Year, 2006, 2015. Also, Pillar of the Community Award from Boys and Girls Clubs of Oakland and Macomb Counties in 2017, as well as Walsh College's Jeffrey W. Berry Award for Educational Excellence and Community Service in 2018. Finally, Foreign Policy Association Corporate Social Responsibility Award in 2019. And I'm going to wrap it all up by saying his biggest awards are being married to his wife, Christine, for 33 years, as well as his 2 adult children, Andrew and Allie. With that, again, I want to formally introduce Mr. David Provost to the What Do We Do podcast. Thanks again for being here, Dave. We're happy to have you.
Dewey, it's great to be here. I really appreciate the opportunity.
Absolutely. And because you're no longer working formally for the bank, you can speak freely. Our relationship, part of it is with an organization at the DAC known as the Beavers, where they say everything is off the record, okay? This can be off the record or on the record. I'll let you choose.
Yeah,
fair
thanks.
enough, okay? But with that, I did not talk about your childhood, and I'm going to start today's podcast for our listeners and our viewers by having you share, again, your childhood. It's an amazing story and one that I'm sure our listeners would love to learn.
Dewey, thank you very much. I was very, very lucky in my childhood. I was born in Daegu, Korea, right after the Korean War. My parents were missionaries. My mother was born in Korea. My grandparents were missionaries. And my great-great-grandfather was a missionary in Hanoi, China in 1849. So I really come from a complete line of missionaries, doctors, school teachers, social workers. That's my entire DNA. And that's really gives me the opportunity to really give back now that I have an opportunity to give back to the community.
Well, that's amazing, Dave. When did you come to Michigan?
So I came to Michigan for junior and senior high school. My father took a church in Mackinac City. And I'm really glad that you make that part of your logo, the Mackinac Bridge. I spent a lot of time giving tours of the Mackinac Bridge. I earned my way through college by driving and working on Shepler's Mackinac Island Ferry. Some people say, how many times did you go to Mackinac Island? I said 13 times a day. So I would go back and forth and back. It was a great job, good opportunity. And really what it did was really increase my customer service skills. Shepler's is really focused on the customer, and that's a great place to grow up and great training for me.
Yeah, when I heard that, I thought it was amazing. You worked on a boat that went back and forth from Mackinac City to Mackinac Island, not once a day, but 13 times a day for an entire summer. And so after that, what got you into banking and finance, or how did you find your way down to Metro Detroit?
So graduated from Alma College. I received a job offer from Manufacturers Bank of Detroit. Now, I say that because I applied at 25 different places. There was a recession at the time, and I got one offer, and that was Manufacturers Bank. So if you think that you're kind of led in a certain direction, that was it. I started as a branch management trainee as a teller. I started as a teller. Great training. I suggest that to all bankers now. Spend 3 months on the teller line, and you'll learn about banking. And I worked my way up, and then I ended up in private banking. Private banking to me was just the opportunity to be able to help people and to be in banking, and I actually got paid for it. So it was a great opportunity for me, And then when a new bank was being opened up in Bloomfield Hills, I was asked to lead that bank, and that got me into the CEO spot.
Fantastic. The follow-up to that would be, Dave, that a lot of our listeners, a lot of our viewers are small business owners, or they, in fact, work for, companies that work with banks, deal with banks, and need banks. So with your background in banking, and we talked about it as I formally introduced you, can we kind of now talk about, what you see in today's current environment of banking, but not as a banker, but as maybe, a customer of a bank or an employee at a company that needs a bank? Can you kind of talk about, again, how things are way different now than they were back when you started?
Right. So banking has really changed. No one or very few people actually come into a branch anymore. We have all these branches. They're underutilized. It's all gone electronic. My suggestion to people is you still need a relationship. And even if that relationship is an online relationship, you still need a relationship with an individual that knows you, that understands your family and your issues, and then can solve your problem for you. If you don't have that relationship, you ask a question of the bank, and the bank doesn't solve your problem. They might answer your question, but it's not solving your problem. So I suggest that you form those relationships with bankers, and it'll make life a lot easier. So for small businesses especially, you need to have that relationship.
Do you have an opinion about credit unions versus banks, and whether it's on the deposit side or the lending side? Without getting deep in the weeds, what are the differences, and what should, our listeners and our viewers kind of understand about how the banking system works?
Well, when you're talking about credit unions and banks to a banker, it's like talking about Michigan and Ohio State. So we're very biased. We think banks do a great job of satisfying all your needs. Credit unions really do a good job at the local level, handling individuals for smaller transactions. That's really the difference that I would say. But banks are there and really can grow with you as you grow over time and as your needs increase.
I always kind of thought that the credit union might be better on the deposit side, but when you needed lines of credit or business types of loans, that it may be beyond the skill set or the availability of the credit unions.
Right. No, they're getting better. Their credit unions are getting bigger, and they're getting more expertise in those areas. So I don't want to downplay that too much. They're good competition for us. We compete against credit unions as much as we compete against the bank down the street. It's all in the financial services. But what is happening now in the global financial services is banks become less and less relevant for a lot of products. Products are being stripped away from the banks. Because of regulatory issues and so forth. One, for example, is mortgages. Dan Gilbert's a great friend of mine. He taught me mortgages back in 1989. But they are taking the bulk of that business because banks can't deal with the regulations. And the same thing goes for securities products and different types of things, that there are other avenues that a consumer can get those products cheaper than dealing with a bank, and that's unfortunate. And that, you talked about all these banks being merged that I was a part of. That's the reason for the mergers, is we need, as a banking industry, we need to cut costs. The way we cut costs is to get bigger, and then we don't need as many branches. We don't need as much staff.
So we've seen that consolidation continue this year in particular. So is it going to continue at some point? Is there just going to be one bank that buys all the rest. Obviously, that's an exaggeration, but is this merger and acquisition going to continue? And other banks, there are new ones starting. So is this a perpetual hamster wheel?
As banks merge, that there's usually a displacement of bankers, and the history is then they go start another bank, and it perpetuates itself. But today, it's very hard to make money as a small bank, and you need to have a return on your investments for your shareholders. Otherwise, they're not going to invest with you. They're going to go and buy Tesla or something. So you need to be of scale to be profitable. And the way that that's happening in the banking business is they continue to merge. When I started, there was probably 16 or 17,000 banks, and now there are less than 5,000. So what's going to happen? Canada has a model where there's 5 or 6 banks in Canada, but now the regulators are a little nervous about banks being too big. You've heard about too big to fail, right? So regulators are nervous about banks being really too big. So there's a lot of pressure on large mergers that maybe they're not going to happen. So we were fortunate to have our merger happen before the regulatory environment changed, but I don't know if you're going to see them at that level, the big level, but you're going to see a lot of small banks merge.
Makes sense. The question would then be going to online banking for our younger audience. They don't know what traditional branches are, and they don't bank there. For our mature audience, I don't use the word old, Dave, because I'm now 50, so we use mature. So for our more mature audience, they don't want to do online banking because their money may disappear. It won't even show up where it's supposed to be. So, can you talk about both of those from the actual perspective, but also, just the psychological perspective that I just described?
Right. So, you mentioned my children. A perfect example. I don't think they've been in a bank that I haven't been a part of. They haven't been in a bank. They do everything online. They're very comfortable online. They use online payment services, and whether they need a bank or not they're ambiguous to that. Now, the more mature customers want to come in.
Like that.
They want to sit down. Yeah, I'm getting to be more mature. They want to sit down. They want to really have that connection. But unfortunately, with the pandemic, they couldn't come into the bank. Very few customers came into the bank, and so even that segment of our customer base has now gone online and become much more comfortable online. So I think you're going to see more and more of that.
From a profitability standpoint, and this is, again, a result of COVID, I think, and the transition to a more technology-based, call it work from home if you want, but just in general, if the more mature banker or, individual had no choice but to use everything technology driven. From our perspective here at Great Lakes Wealth, it becomes more efficient. A lot of ways. There are some inefficiencies for sure, but from a cost savings. So is this where it becomes more profitable for the bank, or just even more, more profitable for the client too, because the fees are lower, or kind of how does it work from an aggregate?
So eventually it becomes more profitable. But today, what we have to do is we have to serve both the online and the in-person. So really, we have a double cost today because you have to invest in both avenues. And it's very hard to close a branch. So we have branches that are in markets that really you wouldn't put a branch in today. But if you close a branch, people get pretty upset. So we don't like to close branches.
Makes sense. So down the road, let's see the view 5 years out, 10 years out, 15 years out. Where do you see, banks as an industry and the banking environment?
So less and less branches, more and more online, less banks, more customer service. You need to be able to serve your customers, whether it's online, over the phone, but you need to be able to service those customers. And I go back to my original point. That's why you want a relationship. You really want to have a relationship where you can pick up the phone, somebody's going to respond to you, and they know your history.
Write it down. Podcast listeners, YouTube viewers, you heard it here first. Let's see what happens 5 years, 10 years, 15 years out. We will keep score and we will review. Thank you for that. All right, now we're going to go on to the next topic, which is the other side. David, I also know that you do invest. You have multiple investments in multiple, categories. So again, for our small business owners, for our listeners, our viewers that are trying to be entrepreneurial, we talk about streams of income. You may or may not know this, but we say it all the time on our show. The average millionaire has 7 streams of income. Does that make sense?
Absolutely.
Right. Well, we don't like to be average around here, Dave. So we recommend to our clients and our listeners and our viewers to have 11. Okay, at least 11. Perfect 10, but one more just for good measure. Okay, a perfect 11. So with that, can we talk about put on your small business owner hat, your medium-sized business owner hat, or your employee hat when you want to have a side hustle? Post-COVID, as we are now into 2022, where do you think things need to go for businesses to thrive and for individuals that are trying to make their best life happen to thrive? Any comments about where we were versus where we are now and where we need to be?
So the first thing I like is your philosophy of diversification, having different streams of income. I have been involved with so many companies that have failed and be devastating for for the owners and the employees. Having multiple sources of income is really a very prudent thing to do. I think you don't put all your eggs in one basket, because I've seen those baskets that have broken.
Well, we're going to stop there and we're going to tangent out, because I don't know if you know this, but the stock market finished 2021 with another, near record performance. Okay. And so going back to 2009 to 2021, it's basically been all straight uphill. Okay. So I'm being a little sarcastic that things don't fail, Dave. Investments don't ever go down. Everything works out. And if you're in something that's not working out, you just need to put it into something else and that will go up, because again, the last 10 to 12 years, people have seen nothing but primarily, even through the COVID dip, just do some hocus pocus in DC or some hocus pocus around the world. Right. Things take off again, right? So before we go on, comment to the reality that, again, things don't always go up, and there are challenges that are always there.
So when when you've been around for a couple of years, you remember the 1986 crash, where so many of people that were in these options and so forth really lost everything in one day. It was gone in one day. Then you had the .com crash, where conversations about DoubleClick and all these internet companies all of a sudden just kind of disappeared. You couldn't get out. And then again in 2008. So in my lifetime, I've been through 3 of these. And when you see those, you don't want to get too conservative, because you'll miss out. If you got conservative in 2008, you've missed out on one of the greatest bull runs in history. But you also want to mentally be prepared that one day, it's gonna be a downturn. And I know you've, advised, me and the clients, on your clients, the fact that you want to be ready for that, and you have to be diversified. So, that's my investment philosophy. I keep a little bit in cash, I keep a little bit in bonds, a little bit in stock, and then I invest in myself. So you want to talk about your small businesses and so forth. I really love investing in companies that I have an input into their management, or that I know the person that does. I get a lot of joy out of investing in young people. We call them, we call these search funds, where I will invest in a young person to spend a year or two trying to find a company. And when they find a company, then they bring it back, and then we decide whether it's a good deal and we're going to invest in it. And those have been very, very successful for me and very rewarding, because you can take an individual that really wants to do something and give them a chance. So that's search funds. I like to invest in those. I also like to invest in different companies where, again, I have a influence on.
Hey guys, it's Brooke. I want to take a minute to talk to you about Dewey Stephan and his great team at Great Lakes Wealth. Do you feel overwhelmed managing your assets? Well, Great Lakes Wealth offers Wall Street solutions with Main Street values. That is really what they are all about. They will help you develop a custom financial plan utilizing all of your assets and keeping your goals in mind. That is what Great Lakes Wealth is all about, helping you and your family achieve your financial dreams. So go to greatlakeswealth.us to schedule an appointment today and tell them Brooke sent you.
Birds from the wise. On that topic, now that you are no longer formally with TCF or Huntington Bank, what are you doing to stay busy? Christine, I'm sure she has a honey-do list, and I'm sure you're on it first thing every morning and on it all day. Or maybe your honey-do list is get out of the house and don't come back until dinner. But seriously, what is your current chapter, and then what do you see yourself as an entrepreneur now? And then maybe even talk about your children and what you're encouraging them. And I'm going to take a second after that. I'm going to tell our audience an awesome story that you told me some time ago about your children. But please.
So, in fact, the conversation came up this week when my wife said, "I thought you were going to retire." Because I am as busy now as I've ever been, even when I was the CEO, of the bank. I'm working with charities. I'm working with entrepreneurs. I am spending a lot of time giving back to the community, and it goes back to my roots. My parents gave their whole lives for giving back to my community, and I have the opportunity to do that. So getting involved with charities, I love charities that are small, that I can contribute to and have some influence on. That's a great way to spend time. What type of charities do I look for? My parents were involved in education. When they were in Korea, they set up a school, junior and senior high school. In Korea, at that time, you had to pay to go to junior and senior high school. And most of the people in the countryside could not afford to go to school. And that's where my father's mission was setting up a Christian-based school that would help these students. He started with 30 students the first year, and he got scholarships from people in the United States. I can remember, licking the envelopes and the stamps and asking for $12 a year. You could sponsor a student. And then he grew that to over 3,000 students. So that was education. I grew up with that, going to the school and helping out. I would actually teach English. You asked me if I could speak Korean. Yes, I went to a Korean school, but I would teach English at 9 years old. So it was kind of it was fun for me to be able to do that. But education, I know the importance of education, and in our system in our country today is not fair. Our education system is not fair. And so I spend a lot of time helping underprivileged students get an education, especially in college. I was giving away scholarships for a while with a group of a group of my friends. We were giving away scholarships. We have 500 applications, and if you didn't win the scholarship, we only gave one a year, full ride, everything completely covered. In honor of a friend that died, Rob Sheely. And we wanted to rock someone's world. What happened was, at the beginning, 15 years ago, if you didn't get our scholarship, you didn't go to college. And then I saw it change. Everybody's going to college. They're just getting loans. The scholarship wasn't important anymore. They wanted a scholarship, but if they didn't get it, they would get a loan. So we moved our emphasis, and I now mentor 25 people from Detroit that are going to college, not by giving them a lot of tuition money, but mentoring them. What is it like going to college? I call it giving them beer money so they could go to the football game, clothes, laptops, and really helping them. They all have an assigned mentor, so the success rate for those individuals is much, much higher. I mean, probably 50% higher than somebody just going to college from a low-income area. So I spent a lot of time doing that. The next love I have in the banking business is housing, low-income housing. And this is not your traditional low-income housing, but this is housing, affordable housing. So what I did was we went to the mayor of Detroit helped us find a neighborhood. We call it the Marygrove District by Marygrove College. And what we did was we gave $25,000 to anybody who bought a house in that district from the land bank to fix up the house, and we would finance it. And it was great on paper, but what we found was people didn't know how to fix up the houses. They didn't know the financing, and they would spend the $25,000 before they got the roof on. So we changed the philosophy, and what we did was we fixed up the house. We would sell the house at the market value, and our goal was to lose less than $25,000 on every house we sold. It's a great business model.
Okay.
So we would help a lot of people get affordable housing. So education and housing is really how I like to spend a lot of my charity time.
Well, I had heard the story about you and, again, your friends coming together privately with your own personal funds in honor of the gentleman you mentioned. And, again, rocking someone's world every year with a full scholarship, including books and clothes and that beer money, right? Yeah. So I'm excited to hear that you've been able to evolve or to analyze and evaluate and have taken it to a new level. So our friendship started as a mentorship where I was a young lad. You were not even mature yet yourself. And I would always observe. I would pay attention. I would see what you would do, whether it was in your community or, again, to friends in need.
And I think you should tell the audience where that originally met.
I will, and I was teasing Dave before the podcast today that we met in 1986, okay? And I learned earlier today that was also the year that Dave met his business partner, but also the year that he met his wife, his business partner for life, Christine, right? And then I said, hey, we met in 1986. So it was like the trifecta for Mr. Dave Provost, okay? So with that, audience, I've said this before in our podcast. Episode 1, I go in detail, but I owe a lot of who I am today as a man to the mentors that I had at Birmingham Country Club. And you are certainly one of the few at the top of that list that weren't just there for me to carry your bag around for 4 hours for a measly $3 or $4 or $5 tip. Back then, that was big money, though, by the way. Yeah. But no, so I spent my summers caddying and working in the shoeshine room as well as the bag room and the first tee, kind of always around Birmingham Country Club, hustling, making a buck. And so from 1986 until almost I graduated college in the early 1990s, you were there as just someone I looked up to and I worked for. And then as I graduated college, I came back. Everyone knows part of the story, but I came back to you when I started my career in investment services and said, hey, Dave, I know you just opened a bank, the Bank of Bloomfield Hills. Can you kind of mentor me? And so I'll leave it there that you kind of gave me some advice. And also I said, hey, I'm going to join the Detroit Athletic Club. Would you mind being one of my sponsors? So for all of our Detroit Athletic Club brothers and sisters that are listening or watching today, yes, David Provost was one of my 2 members sponsoring me, so you have him to blame, partially. Okay. But so with that, I wanted to say a real quick story about your son and daughter. And again, our show is about community. It's about teaching and sharing our life stories. I've said, some of mine with my children, I tell them all the time, CYB, count your blessings, right? I also tell them when they're out doing something, not don't do that, that's bad, but I always say MGD, make good decisions. I kind of put the onus on them when they're 5 or, my oldest is 18, make good decisions. So it's kind of on them to own it. Well, audience, Dave, again, has shared many stories with me over the years. And one is I was talking to Dave about my children and, what I should do as they're getting older. And I want you to tell the story about how I think your children are both in New York and how you encourage them to have dinner once a month. Does that still happen? And maybe tell that story and what you do.
Right. So, I have a son and a daughter, both in New York City. And sometimes they don't get along. I mean, it's, siblings, but we think that it's important for them to, have a relationship. So what Christine and I do is we encourage them to go out for dinner once a month together, and we're going to pick up the tab. And what they do is they try and finagle the most expensive dinner they can, and they work together of how they're going to take advantage of this opportunity.
Do they like get a helicopter from down, at the financial district to take it up to the top?
No, it's just for the food.
Okay.
And so they have a great time in really scheming of how they're going to take advantage of this opportunity. But what it does for them is it gets them to work together, and I think it really helped grow that relationship.
Yeah, and I agree 100%. So for anyone out there listening, again, it doesn't have to be a fancy restaurant in, New York City or even anywhere in Metro Detroit. Again, it can just be something to encourage your children to do together at some period of time to have that bond, right? And family should be everything if it's a healthy environment and a healthy relationship. So that's something that I learned, and I have my own little twist on that with my 3 amigos. And so that's, again, something that I'm glad you're able to share with our audience. I'm going to pivot again, and we're going to talk about a couple topics du jour. This is a French word, du jour. Have you heard of this?
Yes, I've been to France.
So we're going to talk about kind of what's going on in this current, hopefully going to be post-COVID world here soon. But the current themes of the day, we're going to go through them one at a time. One is the Great Resignation. Now that we have full employment again, everyone is now wanting to become unemployed on their terms. So the Great Resignation. We're going to talk about inflation. We're going to talk about what looks to be a rising interest rate environment over the next so long that you'll tell us how long this is going to be. And then the fact that we're all living longer, so longevity and centurions. And then the global economy versus an isolationist economy and how that all wrapped up together. You see the world in the future versus the world today. So the first one, let's go through the Great Resignation. What do you think about the labor force and employment and unemployment and the people's search for their future?
Well, it's very perplexing of where all these jobs or where all these people went. But if you really dig down into it, there are other people can live cheaper now than they used to before because they can work from home and they can do things that give them more time. And I think that that's going to be a part of the future. There is a supply and demand for employees, and right now we've seen it. There's lack of employees, so the wages are going up. They talked about we're going to have a minimum wage of $15. Remember that? That was 6 months ago, and now you can't hire anybody for less than 20. Or it works its way through the system. Then people will now come back because they can get paid properly, and they'll come back. So you're going to see that happening. But this also is a great opportunity for people that don't like their jobs. If somebody comes in and complains about their job to me, I said, do me a favor, right? Take a week off and go find another job and then come back to me and we'll have a conversation. So if you don't like your job, take this as an opportunity. Go find another job, and you'll be better off for it, and your present company will be better off for it, and your future company will be better off for it. So take that opportunity and go out and do something. I left the bank when I left Manufacturers Bank when I was 34 years old to try and set up a brand new bank. I mean, it was scary. It was a scary time, but that investment in myself worked out, and I would encourage your listeners to do the same thing.
Amen. Live your best life, but don't take an easy route. Do your research, do your homework, and don't just leave in a huff and a puff one day, right? Find a mentor, someone to talk to evaluate what you're about to do. So we agree with that. We actually had a podcast on recently about the Great Resignation, and we hit on all those points. So absolutely.
Right. I don't know what the exact number is, but I would say that at least 20% of the people that resign from the bank actually came back, right? So you as an employer, you don't want to be disrespectful for the person that's leaving. You want to celebrate the fact that they're have another opportunity. And as an employee, you don't want to be disrespectful because you might want to come back one day. And you also want to have that reference.
That reference for sure. Absolutely. Okay. Next one, inflation. Have you heard of this? Have you heard of this word inflation? We don't even know what this means. We actually just did a podcast, Dave. And
well, if you were around in 1980, you would know what you would remember the fact that prices were doubling and doubling and doubling, and interest rates were 18 and 20% for a car loan. You couldn't get a mortgage because the rates were so high, so you had to get a land contract. The inflation is really the killer of wealth, and especially for people who aren't investing with companies like you, because that dollar is just not going to buy what it could today. So today, the inflation numbers came out. They're off the charts, and it's really driving, taking wealth away from individuals that have saved.
Do you think it's going to continue? The Federal Reserve also announced that they stick pat that it's transitory. They said now by the end of 2022, things will moderate. We are on record here at the What Do We Do podcast and Great Lakes Wealth saying we're not so sure. They may come down a little bit from these levels, but then we actually think we can see evidence that they'll even go higher into 2023 and 2024 and beyond. So from your chair, from your perspective, where's this inflation? Are we back to 18 and 20% down the road, or
no,
what do you think?
I don't think we'll go to that. But if normal inflation is usually 5 or 6%, we haven't experienced that in the last 10, 12 years. But so you're going to get up to that. But right now it's higher than that. As the numbers come out, it's higher than that. But it'll stabilize, I think. I don't think it's going to go off the charts. But you need to be prepared for a 6 or 7% inflation rate. And, you need to be invested properly to take advantage of that.
We agree 100%. Be invested properly. The next topic would be, again, rising interest rates. And as you just said, if inflation's 6 or 7 and be invested appropriately, we used to say around here, cash is king. But in the last 18 to 24 months, we've said cash is trash. We've said you have to have enough for 3 to 6 months of emergency expenses. And it doesn't mean you have to go out and buy all the micro cap, small cap investments that you can find, but you need to be able to keep up with inflation. And in a rising interest rate environment, you need to change your investment portfolio around a little bit as well. So what do you think is going to happen with interest rates for this year and then in the years to follow?
So interest rates will go up. You cannot have inflation that is higher than the interest rates, because people who want to invest in bonds and fixed rate securities want to make something on their money. And if you're investing at 2% and an inflation rate is 6%, you're actually losing 4%. It's not hard math. And so people aren't going to invest, and they'll force the interest rates up. Right now, the interest rates are artificially low because of the government buying program, and they're slowly weaning off of that where the government is setting the rates. And when the market sets the rates, they're going to go up, and they're going to go up very fast. So if you're out there looking for a mortgage or something, get it quick.
Oh, wow. I like that. You're on the record, folks. Rates are going to rise quickly. Interesting. And I think I tend to agree. Along with that and cash, we're going to go to a different topic. I'm going to pivot again and talk about digital assets or digital currencies and traditional cash and the printing of all this money, artificially low rates and tons of money. Where are we going to be in the future as it relates to the dollar and the valuation, strong dollar, weak dollar versus other currencies, including this new currency? It's actually 12 years old now, called Bitcoin and these other digital coins.
So as you keep spending money as the government and then printing all this money, that devalues the currency against other countries. Now, if everybody's doing the same thing, you kind of stay even. But that's not happening today, and so our currency will start being devalued, which means it's going to cost you more to buy goods and services from overseas. And when you travel overseas, you're going to be shocked at how much it costs. That's what happens when our dollar devalues. When you talk about Bitcoin, as a banker, we're not really fans of Bitcoin because two reasons. One is all of our ransomware, extortion attempts, drug dealing, gun dealing is all handled through Bitcoin. And one day, my prediction is, you've heard it here first, that the government is going to get very involved in Bitcoin. And because the government wants to have control. In the last regulation that they put out as a test, the government was asking us as a bank to report every transaction of $600 or more. Well, that's, people aren't going to really put up with that, so they're going to go someplace else, cash, Bitcoin, and so forth. So that, I think, has artificially raised the price of Bitcoin, my personal opinion. And when if the government really gets involved, they might discourage Bitcoin, and you're going to see a price drop.
You heard it here first. What about gold and precious metals or oil and commodities? They're hedges against inflation. Sure. They also are alternatives to traditional currencies from a store of value, something that maybe the cryptocurrencies are not quite yet. But what are your thoughts on other investments that are known as hard assets?
Yeah, so I like to have a diversified portfolio. I've owned those assets before. They've worked great as a hedge. But you don't see those assets going up by $10,000 in a month. They're very stable. There's a market. It's all a supply and demand, just like Bitcoin and all the other investments. It's a supply and demand, but it's a very stable, relatively stable market, and it has acted very well as a hedge.
Awesome. We're going to finish this topic up with one final question, which would be, and I don't want to put you on the spot, but I will. Let's say for the next 5 to 10 years, if I was that student that you were mentoring and I just, inherited or saved some money, let's say $100,000. I've got $100,000 that I've saved for the next 5 to 10 years, without getting into the weeds about all of the specifics of that person. What would be a good diversified portfolio, mostly growth, mostly whatever it is. I'll leave it there. Where would you tell them broadly, put your money into this and then set it and forget it, or put it here in day trade, et cetera?
Right. So that's not my expertise. That's your expertise. So I would refer them to you. I'm not,
That's greatlakeswealth.us.
I like a balanced portfolio, and I'll let you work on the particulars of that. But the key is that you invest the money, and it doesn't have to be $100,000. You could start with $100, put it in every week, every month, whatever, and you build that up. And if you start young, you will be very surprised, and you could see these tables, especially if you use a 401k or some tax deferred mechanism, how much that grows when you get to be somebody old like me.
You're not old, you're just mature, my friend. But yes, I will echo Dave's comments there. Go to our website, greatlakeswealth.us, and at the bottom, we do have calculators. We do have all the tools so you can just see for free the power of compounding. And you can, and we've said this before on the show, you can start with $100, and you can add $10 a week, and you will see. We've said before, Dave, the rule of 72, right? If you get a 10% return on your money, simple math, you'll double it every 7.2 years. If you get a 7.2% return on your money, it doubles every 10 years. Simple math, like you said. But money in the bank or money on this table doesn't earn anything, and you actually lose with inflation. So again, we want to say this loud and proud because so many people, are not being proactive. They're just kind of sitting there dormant, and we want to encourage success. Fair enough?
Yep.
Okay. Well, now we're going to get into my favorite part of the show, Dave. This is called the What David Do segment. Okay. We all get to hear what Dewey do. It's fantastic. But today, this is your show, your segment. So we want to ask you, what is one thing that you would go back and tell your 18-year-old self or the 18-year-old young men and women out there today? What David do?
So what I would do if I was 18 years old today is I would invest more in myself. I had a job. I got a paycheck. I did very nicely. I was able to buy a car and go to college. After college, I got a job. I had an apartment and was able to live a very comfortable life. But what I would have done when I was 18 is I would have maybe had, as you said, a side hustle. I would have looked at opportunities where I could invest in myself and have a side company, learn about life, learn about business, and build some wealth that way. The other thing I would have done is I would have saved more money. I don't think I would have had to get that new car or whatever. I could have invested more, and it might have worked out better for me.
Well, I appreciate that, and that's so true. So I hope all of our listeners and all of our viewers paid attention to that, because it is so true. Invest in yourself and start young and save. Along with that, I'm going to ask you, if you can, before we wrap up, tell us a few, if you're willing to, of your biggest successes, and maybe one or two, if there are any, of your maybe biggest failures or missteps.
So let's start with the missteps. I have had probably a dozen very bad days where something bad has gone wrong. I've lost a bid, or I've lost a customer, or something has not worked out the way it was drawn up in the morning. But in almost all of those cases, 9 out of 10, something then opened up in the future. I didn't get the job. If we have time, I'll tell the story about I applied for a job of a president of a bank. I put a great presentation together. I just nailed the interview. The next day, they called and says, we're taking somebody else. 2 days later, someone called wanting to set up a bank, and would I be interested? Wait a minute. I have the whole plan already here. It's a great opportunity. The bank that I set up became very successful. The job that I was applying for, that bank really was sold and failed. So what I tell my the students I'm mentoring, you are going to have some bad days, but don't look at that as the end of the world. Look at that as an opportunity that something else is going to open up for you. So that's my bad days. We bid on a bank in Michigan called Fidelity Bank, based in Dearborn. It was in the front page of Cranes that I was going to win that bid and buy that bank. And when the bid came out, I didn't get it. In fact, Huntington bought it. So Huntington bought the bank.
Everything comes full circle, Dave.
Huntington bought the bank. I was devastated that we didn't. I'd already had the plan made out of who's going to go where and what happened. Less than a week later, we had an opportunity to buy a bank in Warren, Ohio, that was 10 times the size of the bank that we were looking at. And so the door closed, another door opened. Successes, I've been very, very fortunate in life. Starting out, I say I was born on third base, emotionally, spiritually, but I was born in the dugout financially. My father made $600 a month. I bought my clothes once a year from a Sears and Roebuck catalog, and I was lucky because I was the oldest. My brother always got my leftovers. So, I mean, when you start there, you appreciate, you really appreciate life. So, meeting my wife, my business partner, and you,
The trifecta,
in 1986.
What a year.
But, having the opportunity to start a bank when I'm 35 years old, and then to buy these banks, we bought 14 banks, and a lot of them were distressed. It was financially, it was fortunate because the FDIC, in essence, paid you to take the bank. But when we took those banks, we saved a lot of jobs. We saved a lot of jobs in Michigan, Ohio, and Wisconsin. We invested in Michigan when no one else would invest. This was in 2009, 2010. No one would invest in Michigan. We're the only bank to bid on these 9 banks that you mentioned. We're the only bank to bid. So it was very rewarding, and I consider it a big success.
Absolutely. And we go back to the the introduction, the beginning, and all of your successes. It doesn't come easy. You had to take a chance in 2009, 2010, and you had to have investors give you money to invest in these banks per se and go through that. And there's a reason why no one else would invest, because it wasn't safe. It was unpredictable and probably a dumb idea to a lot of people, right? So we go back to, again, you have to invest in yourself, believe in yourself, and do all of that. So again, your success wasn't just, again, because you were in the right place at the right time. You were prepared, I think, also. Is that fair enough?
Yeah, it's not like buying a lottery ticket, but you want to be prepared. And the other thing I tell mentors is, even if you're the 12th person on the bench on the basketball team, you're way at the very end, that coach might call you, and you might get out there, and there's no time left on the clock, and you got to shoot that free throw. And you better be ready for that mentally. That's happened to me, where I told the story. I grew up in Korea. I didn't know how to play football. And I went out for the football team in high school. And the coach said, "What position do you play?" I said, "I don't even know how to play." He said, "Stand next to me. You're going to be the 3rd string quarterback. Carry the clipboard." And the second week of the season, the 1st string quarterback broke his arm. The 4th week of the season, the 2nd string quarterback broke his leg. I had 4 weeks to get ready, and I'm the 1st string quarterback. And you have to be ready, because you never know when you're going to get that call.
Amen. Agree 100%. We're going to wrap up here in a minute, but I'm not going to get you out of here without telling our audience your philosophy on things versus experiences, right? A lot of people want things, and we'll leave it at that. So talk about your philosophy of having things versus experiences, life experiences.
Right. You like to have things. I like to be comfortable with things, but there's always a bigger boat. Somebody always has a bigger boat. Somebody always has a bigger house. You're never going to win that race. What I love to do is the experiences and doing something unique, traveling, going to different organizations and experiencing something with a good chef, or I'm involved in the Detroit Symphony. I don't know anything about the symphony, and I've been learning the symphony. Just experiences, traveling to Africa, to Korea, to wherever, and just learning about life is really where I want to spend my time and my effort. I also love to play golf, because golf gives you the opportunity to have an experience in a lot of different great places in the world, but also to spend time with 3 other people. Where else do you get to spend time with 3 other people for 4 hours with no cell phones? It's just a great experience.
Fantastic. I appreciate that as well. And please, to our podcast listeners and YouTube viewers, write that down. Things, are just that, inanimate objects, purses, cars, boats, whatever, but experiences truly bring a community together, whether that's you with your family, take time with your children, your significant other, your parents, those that are very mature, but also, again, appreciate the experiences that are there, and they don't have to cost a lot of money either, right? So we think that's very important. That's something else I've learned from you. Dave, we're out of time. I know that you want to stay. I would love for you to stay for another hour, but with that, we again appreciate you coming on. This is season 2, episode 9, number 51, and as we always say, we are 51 episodes in, Dave, but we're just getting started. Thanks so much for the time to come out today. I'll see you again soon, but to our listeners and our viewers, we'll see you in 2 weeks, and we'll do this again. Thanks again, my friend.
Great. Thanks.
Booyah.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.